G'day, and welcome back to Down Under Dollars, where we cut through the financial rubbish and give you straight-up money advice built specifically for Australians. Now, let me ask you something dead simple. Do you actually know what interest rate your savings account is paying you right now? Because if you're like most Australians, the honest answer is probably no. And mate, that is costing you serious money every single month without you even realizing it. Here's the thing. While most Big Four banks are quietly paying their loyal customers 0.5 to 1% interest on standard savings accounts, some Australian banks and neobanks are currently offering above 5% on high-interest savings accounts. That is a difference of thousands of dollars every single year on the same pile of money just sitting in a different account. Today we're ranking the best high-interest savings accounts available to Australians in 2026, breaking down exactly what to look for, what traps to avoid, and how to make your savings work as hard as possible for you. Let's get into it. Right. Let's start with some uncomfortable truth, because the Australian banking system has been quietly taking advantage of loyal customers for decades, and most people have absolutely no idea it's happening. The Big Four banks, Commonwealth, Westpac, ANZ, and NAB collectively hold the majority of Australian savings deposits. And for years, they have offered rock-bottom interest rates on standard savings accounts while quietly offering much better rates to new customers through promotional products that existing customers never get told about. This is called the loyalty tax, and it's been bleeding billions of dollars from everyday Australians who simply stay with the same bank out of habit or convenience. The Reserve Bank of Australia has raised interest rates significantly over the past couple of years, and while that has been brutal for mortgage holders, it has actually created a genuine opportunity for savers. Because as the RBA cash rate rose, competition between banks and neobanks for deposit money intensified, and interest rates on savings accounts climbed to levels we haven't seen in over a decade. The Australians who took notice and moved their savings to higher-paying accounts have been earning thousands of extra dollars every year completely passively. The ones who didn't are still earning next to nothing. Before we get into the rankings, let's quickly cover what you actually need to look for when comparing savings accounts, because the advertised rate isn't always the full story. First is the ongoing interest rate versus the introductory rate. Many banks advertise a flashy high rate that only lasts for the first 3 or 4 months before dropping back to a much lower ongoing rate. Always check what the rate drops to after the honeymoon period ends. Second is the conditions attached to the bonus rate. Most high-interest savings accounts require you to meet certain conditions every month to earn the advertised rate. Common conditions include depositing a minimum amount each month, usually $1,000 or $2,000, making a minimum number of transactions on a linked everyday account, or not making any withdrawals during the month. Make sure the conditions suit your lifestyle before switching. Third is whether the account has any monthly fees. A savings account charging you $5 or $10 a month in fees is quietly eating into your interest earnings. Always look for fee-free options, and in 2026, there is absolutely no reason to be paying fees on a savings account. Fourth is whether the bank is covered by the Australian Government Financial Claims Scheme, which protects deposits up to $250,000 per account holder per institution. All Australian authorized deposit-taking institutions are covered, so this is mostly a non-issue, but always worth confirming. Alright, let's get into the rankings, and remember, rates change regularly, so always double-check current rates on comparison sites like CanStar or Finder before opening an account. Coming in with consistently strong rates is UBank owned by NAB, but operating completely separately with a much more competitive offering. UBank has been one of the standout performers for Australian savers over the past couple of years, with strong ongoing rates and straightforward conditions. Their Save account pairs with an everyday spend account, and the conditions to earn the bonus rate are among the most achievable of any bank in Australia. Next is ING, one of the original disruptors in the Australian banking market, and still one of the best options for savers. ING's Savings Maximizer has consistently offered above-market rates for customers who meet the monthly conditions. The conditions require depositing $1,000 per month and making 5 purchases on the linked Orange Everyday account, both very achievable for most working Australians. Macquarie Bank has also emerged as a genuine contender for Australian savers. Their savings account has offered highly competitive rates with simpler conditions than some competitors, making it an attractive option, particularly for those who don't want to jump through too many hoops every month. Move Bank and several other smaller Australian mutual banks and credit unions have also been offering extremely competitive rates, often beating the bigger names, so it's always worth checking the full comparison on CanStar or Finder rather than assuming the biggest brands offer the best rates. The general rule in 2026 is simple. If you're earning less than 4.5% on your savings account, you need to switch immediately. There is genuinely no excuse for leaving your money in an underperforming account when better options are freely available. Right, let's wrap this up with your action plan. Number 1, log into your current savings account right now and check your interest rate. If it's below 4.5%, you are losing money. You don't need to lose. Number 2, head to canstar.com.au or finder.com.au and compare the current best savings account rates in Australia. Number 3, check the conditions attached to the bonus rate and make sure they suit your lifestyle. Number 4, open the account, transfer your savings, and start earning what your money actually deserves. This is genuinely one of the easiest financial wins available to any Australian right now. It takes about 20 minutes to switch, and the reward is hundreds or even thousands of extra dollars in your pocket every single year, completely passively. If this video helped you out, smash that subscribe button, because every week we bring you practical money tips built specifically for Australians. Drop a comment below what interest rate is your savings account currently paying you. I guarantee the answers are going to be interesting. Catch you legends in the next one.